The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone, and congratulations to the Chicago Cubs and to the Cleveland Indians. Both have not won a World Series. One, the Cubs, since 1945. The Indians from 1948. Reminds me of the old election in 1948 with the headlines of the New York Times. Dewey wins, but the problem was Dewey didn't win. Truman won. Anyway, let's take a look at the main news. The main news, very important. We had some excitement here in Arizona. We have a poker tournament at one of our little Indian casinos up in Scottsdale twice a month. It's a very small tournament, $200 buy-in. There's several hundred people. This one happened to be a charity event because of the money that we put in. The casino matches it for the veterans. So it was a really interesting thing. But we had two very special guests at the tournament. One was Michael Phelps, the Olympic swimmer. He was in there playing. He has played a lot of poker in his 31 years. He was very good. And then also we had Mr. October was there, Reggie Jackson, who also lives in Scottsdale and went to school at Arizona State University in Tempe before he became a Hall of Famer. He was also there, and he is a very, very friendly dude. I met him several times when Tommy John was playing for the Yankees. Anyway, let's get on to the markets. Let's take a look here at this DAX. As you can see here, we had this pattern that we were looking at last week. We had backed off to the 61% retracement. If you'll notice, point D was a perfect ABCD correction, and right at the 382 level. That's a very bullish pattern, folks. We pointed that out when it was happening, of course, but what's happening now is we've gone up and made new highs. The $64 question is, how much higher do we go? Because just a little bit higher, you're completing the ABCD pattern off of the 61% retracement, which should yield, some type of a correction. Now, this is not new highs in the DAX long term. I believe the old highs in the DAX was around 12,000, as I recall, but I could be wrong on that. But anyway, this is what's been happening. Now, part of that DAX index, of course, is the Deutsche Bank, and that's the one that has been in the news very, very frequently, of course. And we were pointing this out when we were making the 1.618 expansion down there over the past 9 months, down at that $11.08 a share. This morning, we are trading up against this line here at the 1460 level. That's the 78% retracement. So this is going to be interesting because if we get much above $15 here, and this has broken out to the upside, it looks like, along with what the stock has done for the index itself, the DAX. But this is stock is still under a great deal of pressure. But if we get above that $14.99, $15 a share in Deutsche Bank, we could certainly look like we could move a little bit higher. We'll just have to wait and see. Remember, many of these things are related to what these central banks are doing. In fact, all of them are. Everything that goes on in these things are related because the central banks just keep pumping money at this zero interest rate thing. And believe me, the markets are not saying zero interest rates are here to stay. The bonds, even the German Bund, has sold off, and that means higher rates. But we've seen higher rates in our notes and higher rates in our bonds, for quite some time, and it's not getting any better. That's for sure. If we take a quick look here at what's going on here in the Treasury bond market. Let's just watch this. You'll see, we'll put this over here so that you'll be able to, this is a 4-hour chart, going back several months. And as you can see, we've been in a really strong downtrend. And all we've done now is we've taken almost 2 weeks to make a 382 retracement. So it's going to be interesting. Well, it's 11 days. So The 382 retracement comes in at around 165.13, so that should be some pretty strong resistance, I would think, because it's taken several weeks to make this, and if it was really a good bottom, it would be much like we had on September the 19th when we made the bottom, and then we rallied, very, very strongly. As you can see, this one is not rallying strongly, and that's usually a sign of weakness. And I use the word usually with a great deal of respect, because these patterns don't work all the time, folks. They are based on probabilities, and that's all they are based on. Now, I wanted to follow up just a little bit because we were listening to John Logan before, who's always got a great show. He had Joey John from Hong Kong on, who is a very, very smart analyst and trader. And they were talking about the crude oil market and the possibility of support around this 47 level. Well, we have completed last week. We completed the ABCD pattern up there at that right near the $52 a barrel level. You can see the 61% retracement we pulled back to on September the 20th. That led to the ABCD pattern that completed at this $52. Now, if we follow through to what we did during late August and early September, where the market went from 48 down to 43, which is $5 a barrel, okay, roughly 10%. We will get a $5 sell-off from 52. That'll be down to 47, and that was the exact number that John Logan and Joey John were talking about. So these things fit together along with that TAS profile. So kind of watch that, because this is a very interesting completed pattern. It's got everything you could possibly ask for. You have perfect symmetry. It's taken well over 2.5 months to complete that ABCD pattern, and it's really nice. This is looking at it on a 4-hour basis, and if you wanted to see it on a daily basis, you're going to see the same thing, only it's a little bit more long-term. You'll be able to see that this market has gone up and touched those highs of May, but we could not get through it. Another reason to wonder whether this market was going to go higher, because you had that perfect ABCD. You take out the highs from May and don't go anywhere, and that that's not a sign of a good breakout, folks. There's no question about it. Okay, let's get to the we've got just a short break coming up here, but I wanted to get to a couple of the things that we're looking at here this morning. We've had a request to take a look at Walt Disney here. Just let me get this up here so we can take a look at it here. We were looking at this as a potential buy down there at that 91 level, and we did get there. We've had a pretty good move. If you happen to be in this Disney stock that we posted here in Tiger TV last week, what I would do is to put your stop at break even right around that $91 per share level. That way you're in a risk-free trade. As you can see, the 61% retracement on this Disney trade would take you up to the 96 level. And that would be a very nice move of about 7%, in just a matter of a few days if you happen to get that. So that would be the thing. But you don't want to move. You don't want to risk your original stop, which was at 89 here, because now you've actually made $2 on this. So that's your money. So you don't want to give that back. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look now. Okay, I will cover gold and silver in just a minute, but I wanted to go to the U.S. dollar, folks, because this is what you want to do, is you want to follow the money. We are at what we call a really, really important spot here in this U.S. dollar index. As you can see here in the markings that we have on this chart, we're exactly at the 1.27 expansion of the high that we made in July. That's, the market then pulled back, and you notice we had that 135 pattern that formed at 94. Now we're 5 handles higher now in just a matter of the last 10 weeks, but we are setting at some major resistance at this point. There's also an ABCD structure from the last swing high and low that we have that I didn't put in here in this chart because it would be a little bit too cluttered. I try to keep it so that we can just see what I think are the most important ratios. But we have a very, very important spot here. Now, this is not as important as the one that we had back on July 27th. That's where we had 5 ratios coming together at the same price. We had 618 and 786 contracting ratios, and 3 expanding ratios of 127, 1.618, and 1.618. Whenever you see 5 ratios together, folks, call the orphanage, because Sister Mary Perpetual, we'd love to get into some of those types of trades when we have ratios, 5 at one time. Now, on this particular one, we only have 3 ratios, but we have another ABCD pattern. So we have a really strong configuration of numbers coming in here at this 99 level. Any move above 99.20 would tell us that this has failed, and we're heading back up into the area of above par, which wouldn't be hard to do because this market has been very, very strong. But right now it is at a very, very major support that you cannot, you just can't take lightly if you're trading, foreign exchange. Now, what we want to do is we want to look at the euro, because that is 50% of the dollar index, and we'll take a look at this and we'll see, what's happening. One thing about the Chinese yuan or the renminbi, John Logan and Joey John were talking about that, and it's trading at around 6.7. Up from about 6.5 just a few weeks ago. That's a pretty good move, but it's not really substantial. The difference is not many people And I have a lot of friends in the foreign exchange business are trading that renminbi as of yet. They're watching it, but they're not doing a lot of trading in it. There is trading going on, but the folks that I work with are not, watching it too much. Now, if we look at this euro chart, you can see that we took out the lows of the last few months. That was at a 1.27 level. We still had the potential for the market to go to 108, but because of this dollar index and the fact that the euro is so heavily weighted in that dollar index, you really need to watch this low of 108.50 that we hit last night, and we also hit it at 108.60 that we hit on Friday, and then again last night we came down and touched the double bottom before it rallied 50 pips. Now it's still early, but those are the things that you want to watch, because we're having some really big things happening in the U.S. dollar. Now, one of the components of the U.S. dollar index is the British pound, and I wanted to share some work from our good friend Jim Bartolioni. And you'll take a look here, you'll see this is a chart that goes back over 40 years in the pound versus the dollar. The one thing I'd like for you to focus on is the low in 1985. If you'll notice, that'll be the second dotted line over. It's hard to see the numbers because they're so small, but 1985 in February at the Plaza Accord, we hit 105. Now, if you'll notice the ABCD pattern that led to that, going back into the 70s, then we rallied up into 1982. That's when we were bottoming in the stock market in the United States, August the 9th, 1982. We came down in to make that ABCD correction, and then we made another ABCD correction, back in 2008 when the market was making a high. So this thing almost has a negative correlation to the United States stock market. So if the pound is going down, the stock market should be going up, and that's the main thing of what we're looking at this point right now. Oh, by the way, we have some friends that we went to dinner with last night that just toured northern Italy in Lake Gordo and Lake Como, and it's just the really beautiful part. And there's a place there called Villa d'Este where Carla Bonicelli and Benito Mussolini used to hang out back in the old days, and that's now a hotel. I happened to stay there once, but it is really incredible. But the whole thing was so unreasonably cheap. You wouldn't believe. Their rooms were $59 a night. That was euros, 59 euros a night at the Hilton. Breakfast, a bottle of wine, a small bottle, an 8-ounce bottle, was only €1. So, it's really good value. I mean, you're seeing the same thing in China too. You can take trips to China that are really, really great. The only problem with the trip to Italy was they would not take U.S. dollars. And I had never heard of that before. They've always taken U.S. dollars in Italy, but now they wouldn't. And anytime you went into the bank, they would only give you 100 euros to $100. They wouldn't take any more than a $100 bill. The ATM would, but not the bank. So something's going on over there. I don't know what it is. There's a big election on December 4th. Whether that's going to affect these markets or not, we'll have to wait and see. Now, the next one we want to look at with this British pound is because where we are, we're very, very close here, folks. You're going to see some really interesting symmetry that we've been looking at for quite some time. And you'll be able to see that. If you have a chance, go into Google and type in Villa d'Este. That's E-S-T-E, Villa d'Este, and it is one of the most beautiful places on the. It's better. It's not as good as the Vatican, but it's a really close second. It's I stayed there. I was traveling alone after coming back from Zurich. 1 year, and my friends told me to go there, and it was off season, and I was able to stay there for, I think it was $250, and that was in 1988. But it was really, really a fabulous place. It's really spectacular. It's almost like going through the Pitti Palace or the Louvre. It's just really something special. All right, let's get back to the real world here. As you can see, this British pound also on the long-term weekly. This only goes back, about 8 years. But you see, we are making some type of a bottom in here, so we want to be watching that. To be watching when it is possibly going to bottom. Now, this might be all related to what we're looking at, this U.S. dollar index, or it might mean nothing, because if we pop above that 99.20 level in the U.S. dollar, we could go, substantially higher, because there's a possibility of a really strong breakout. But it's got many things happening at this level of around 99 that we should pay very, very close attention to. We see the same thing happening in the Japanese yen, that we've had some major patterns in that are also completing these ABCD patterns. And again, if we break above this 105 level in the dollar yen, we'll be looking at something, considerably higher, probably up in the area of 110. Which happens to be the area that John Logan was looking at. So 877-927-6648.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
The flag is up, and they're off to the races here at the stock market. We're opening higher and everything. We're going to talk about silver, gold, platinum, and then we'll move on to stocks. As you can see here on the chart for silver, we made a bottom here 2 weeks ago. We really haven't gone very far. We've had a little bit of excitement this morning when the market jumped about $8 in gold and 30 cents in silver, but still nothing dramatic. We need gold to get above that 1276 level. That was that old high. That would tell us, yes, maybe the bottom is finally in. But right now, I think it's best to just, wait to see if that is going to, see if this is going to happen. If we take a look at the gold market, we're seeing pretty much the same thing here. This is what I posted as of Friday. We've had a little move today. We're up about $6 from this level, but we need to get above that 1276 level. That would tell us that we are starting to move. Now, the thing that bothers me here in the gold and the silver is the fact that we made that low several weeks ago and really didn't go anywhere. All we did was make a little ABCD correction at 1276. But in fact, if we can get above 1276, that will tell us, and especially if we do it with a lot of thrust and a lot of power, that would tell us that we have a pretty good chance of the market moving higher. Now, if we take a look at platinum, you're going to see one sick puppy here because this thing just doesn't have legs at all, at least not yet. It's down near that 707 level again. We made new lows on Friday, which is not a positive sign. But again, if that is a major bottom, this market will be really strong today or tomorrow and break out above 1276 in the gold and above $18 an ounce in the silver. Then you'd have a pretty good chance, to see what's going on. Now, if we take a look at the stock market, we've got a little bit different strategy here. Let me just put this up here so you'll be able to see it. This is the E-mini 4-hour chart. What I wanted to do was to show you these where we are right now. If you look at the high that we made back on September the 20th, 21st, when we were having the equinox, the autumn equinox, we're making a 61% retracement of that level up here at this 2148 level. If we get above 2150, that would most tell us that we're probably going to go a little bit higher, but we're not anywhere near contract highs on this, so it's not really too much. Folks, I want to mention one other thing. I'm doing this webinar on the 26th of October. That happens to be HRC's birthday, so we're going to have a big party. And what we'll do is, if you have any interest in cycles at all, and if you have interest in patterns, you ought to come and take advantage of this 1 hour, because I'm going to present the pattern that Roy Longstreet gave me many years ago, and it is really a good pattern. In fact, as I was going through it, I was having a hard time finding losers, but I was able to find it. It's going to be a really good seminar. I'm going to go through a lot of cycle theory. This pattern gives you a risk-reward level, a great entry signal. All of it's there. So if you have an interest in patterns and cycles, this would be a good thing. You can't lose because you get a free book with it that's worth $90, and that's about astrology stuff, which is very good with cycles. So, I don't give commercials very often, but this is going to be a good one. I've had a lot of fun preparing it and everything. I had a lot of memories through it. And that's yes. The reason why the stock market is up is they're getting ready for Hillary's birthday party. So we'll see, and we'll see what's going on here with some of these other markets. Okay, that was the S&P. You can see that one at the 2150 or 2148, 2150 area. The importance. If we take a look here at the Nasdaq, which is really highly influenced by, of course, Google, Facebook, Amazon. Already those things, you'll be able to get that the same way. So this is all this is saying is that we're at some pretty strong resistance level. That's all it's telling you. And believe me, when you see the DAX breaking out of the highs over the last several months, which it was supposed to do, whether this pulls on the rest of the market or not, happens to be, it's going to be very important because, when these cycles go higher, and we certainly could, and remember, if you remember when the market bottomed on October 13th, when Norm Winsky was on, it was really saying that it was really is the main thing. So we'll have to wait and see. Someone's asked a question about the astrology and the elections. Folks, I am not an astrologer. I'm a cycles person. I count numbers and stuff. I'm a little intimidated because of my Catholic background of the astrology, and some of it scares me. Well, a lot of it scares me, but I see the value in some of it. But the people that I bring on the air here, Arch Crawford, Norm Winsky, Shane Smolian, Bill Meridian, Alfie Lavoie, Al Larson. I mean, these guys are really smart. I mean, their cumulative IQs has got to be up there into the top of the Christmas tree type stuff. And they're basically saying that, the charts of Trump versus Clinton are very, very different. His is positive and hers is negative. So we'll see. Basically, someone's asked a question about Ricky the Rocket LaRusso, who used to be with Citibank for many years, and he now has his own advisory service. He is friendly to silver. He's also friendly to gold, and he's would like to see it get down about another $1 in silver and another $50 in gold. But whether that happens or not, we'll have to wait and see if that's going to happen. I hope to get Ricky on the show one of these days, but he's really busy that time of the morning, so it's hard to get him, much like it is with Rich Anderson. So that's another thing to keep in mind. By the way, I did speak to Rich over the weekend, and we were talking, if you remember, we were talking about being long cattle down there at that 97 level. We're now $5 a pound higher, which is a little over $2,000. So if you did some of that, make sure you move your stop up to at least to the 98 or 99 level in the cattle. And the profit objective on the cattle would most probably be somewhere around the 105, 106 level. That would be very similar to the last move that we had off of a major bottom in the cattle. So that's the main thing. As far as one other trade that Rich was really interested in, and I'll post this for you because it's something that you might have an interest in if you like to trade, wheat and corn and stuff like that, but it has some really nice symmetry here. You'll see that here in the wheat, we had all that resistance up there at those 1.618 expansions. That was at the 428 level. And now we've come down, and you'll notice that we're down 7 days today, just like we were back in October. And around the 1st of October, we were down 7 days from the high, and we're doing the same thing now. We're down 7 days. I would like to see the wheat at 407. Right now we're trading at 411 in the wheat. So there's a possibility that we could get down there, and that would be what I think would be a good buy. And then, like they say, a friendly hello and a good buy. But make sure you put your stop in and don't risk any more than 10 cents, which is $500. That's what it costs to be a farmer these days. So don't stay with it just because it gets below 407. Make sure you have a stop in there. Buying at 407. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off.
Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks. Let's take a look here at a couple of things that people have asked me about here over the weekend that I think we need to talk about. Frankly, I don't think there's anything any more important than that dollar index. To me, that is the one that's going to be the key to the whole thing. Now, let's take a look here at this biotech index. This has been getting a lot of play in the news. As you can see here, just a few days ago, we made a perfect 61% retracement in this. It was also a very symmetrical cycle low from February to June and June through October. So as long as we stay above 259 in this index, it should be okay. But these things can move very, very dramatically at times because some of these were very high priced. Remember, this was the leader of the market, folks. This was the one that took us up into new high grounds. And if you'll notice, back in July of last year, we had that big island reversal. And then we had the big ABCD down into February of this year. And since that time, all we've been able to do is make a 382 retracement when we've had new highs in the Dow Jones and new highs in the NASDAQ and new highs in the S&P. We did not do that with the IBB. So it's very, very weak, but we are at some very strong support here in the IBB at this 260 per share level. So it's an important index because there's so many people that follow it. And but that's what it looks like from a chart perspective. It is far weaker than the market the rest of the time. But remember, as we go through bull markets and bear markets, there's a change in leadership, both on the long side and the downside. Years ago, Shearson Lehman Brothers used to bring out the top 10 stocks of the year, the dogs of the Dow. And they did this every year. If you would have bought the dogs of the Dow every year, it would have made money because these were very oversold, good stocks. And I don't think there was a losing year if you bought those. During the years that I followed it, I never did see any losers. But, after all these indexes and ETFs that we have now, they don't even publish stuff like that anymore. So we'll see what that's going to be. Let's see what it is. It's basically contrary opinion. When everybody's looking one way, look the other way. Folks, I have a very dear friend in London, just outside of London, very, very smart man. And I was over there in May doing some seminars. I was able to spend 3 days, actually 4 days with him. And we had a really good visit and got to do some sightseeing and stuff and a lot of chatting and meeting some of his friends. But This was right before the Brexit, 3 weeks before the Brexit, and he told me emphatically, even though it was the odds of 9-1 to staying in the UK, he said that it was going to be a runaway to the other side of the scale. In other words, they were going to leave Brexit, and not many people believed him, but you can see what's happened. The other thing that you want to keep in mind is, what is he saying now about the U.S. election? Strange. He thinks we're going to see a surprise, but we'll have to wait and see. Okay, let's take a look here. We've got we're coming down now. If your folks are looking at this wheat that we're watching, we just hit the 409 level in wheat, so we are getting very, very close to this 407 level. It's not too far away. So remember, if you do happen to buy this, make sure, for heaven's sakes, that you put your stop in, because stops are placed for protection. If you don't use stops, you're telling the market that I know more than you do, Mr. Market, and folks, that is never going to happen. So make sure you use stops on your trades, because if you don't, you're just waiting for a disaster to happen, because the first mistake teaches, the second mistake kills. Your first mistake is you got a losing trade. That happens to all of us all the time. But your second mistake is you don't protect yourself, and that's the one that really hurts you. That's part of Roy Longstreet's book, Viewpoints of a Commodity Trader, that he wrote back in the 50s, and that's one of my favorite quotes, is to remember that the first mistake teaches you, the second mistake kills, and that's what you want to be able to do, is stay away from that second mistake, because that's the one with the man with the sickle is right behind you, searching for you. So be very, very cautious, when you're doing this. But the wheat trade has got all the things that you like. It's got good cycles, good time counts, 7 days down in September, 7 days down in October, Fibonacci retracements. But again, even with all that, all you have is a place to put your stop, and that would be at $3.99 a bushel if you get filled at the 407. So anyway, that's what I wanted to bring to your attention, is because this is something that we can never forget, that we think we know more than we do, which in fact we never do. But we want to be able to at least watch, how we handle, adversity. And adversity is when things go bad, and you've got to be able to protect yourself against that. If you'll notice in sports, the teams that are really the champions are the great defensive teams. In other words, they let their defenses win the game, part of the time. That's the real key to that. That's why they say in baseball, pitching beats great hitting, and in fact, that's true. Unless you got somebody like Willie Mays or Ted Williams, Pete Rose, those types of people, that doesn't make any difference who's pitching. But in fact, one of my favorite quotes from Vin Scully was, he asked Koufax, he says, "How do you pitch to Hank Aaron?" And he said, "Well, I try to pitch behind him, and then after he gets on first base, I try to pick him off." So these are the things that you want to remember. Protect yourself at all times in your trades, and you'll be far better off than if you don't, because that'll just get you to the, and as soon as you're losing trade, forget it, man. It's done. It's over. Go to something else. If you ever had a child and you had to teach them how to ride a bicycle, if they fall over, you don't discourage them, you encourage them. They got to get up and, start pedaling again, because eventually, they're going to be getting it right. So we'll see. We're having a good move here in the Japanese yen. Just a few minutes ago, we popped up another 30 pips, and we're heading towards this 104 and change level, which will get us close to the 105, and we'll be watching that. We just hit the 2148 level in the S&P, and if we close above 2150 today, folks, that will tell us that we're most probably looking at a pretty significant breakout here, and we could be looking at something pretty bullish, at least for a short-term trade. But right now, it's still quite early to see if that is going to happen. So just remember, this is all about probabilities, never about certainties. And we try to hit 6 out of 10, which is not an easy task, but it's certainly doable. And if you could hit 60% in the major leagues, they would have statues at every major ballpark in the world. But frankly, no one can hit 60% in baseball. All right, let's move on to the next one that someone asked us about. But the wheat just happens to be moving, and I wanted to bring that to your attention. that is rather important. There's one other one that looks really good, and this is going to be an interesting one. I should do it too anyway. Oh, I know what I wanted to do. Let's just take a look here. We'll just take a look at this one here. This is the one that you have to either believe or not believe. This is the volatility index on the VIX. As you notice, we're down here near a 78% retracement at around $13 a share. If you buy this, it's trading around $13.05. You put a stop at $11.50. Cross your fingers, make the sign of the cross, and see what happens. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the Dow Jones Industrial Average along with the Bradley stock market model. And as you can see, excuse me, I've inverted this. In other words, I flipped it over to show you the overall. The dates of these lows and highs are very, very significant, as you can see. But the overall trend is what I'm trying to show you here from June through September. You know, this was pointing to the upside in the inverted model, which that's what it did. And now you can see here that we have a really long string of lower lows and lower highs here coming into Bradley. This just means that there's a negative environment for stocks based on the way that they put the energy levels of these from Yale University back in the 1930s, that does have a negative connotation. And believe me, as you can see, this thing, if you flipped it around, would be the exact opposite. So it's really good for picking out certain timing dates, of course, but the main thing is you have to watch the overall pattern that's in the market, because if these things don't work, they're going to go the other way, and you can't stand in front of it. Right now, we're just in this really tight triangle. We've touched it on the downside a few times. The upper part of this triangle is around 18,350 in the Dow Jones. That would be up over 200 today. Right now, I believe we're up about 100 or so. So I would say if we get above up 200, this would be potential breakout. But remember, we had another one just like this last week. There was a break to the downside, and yet we reversed right away. So this is just a tight trading pennant that we're having right now. Nothing really dramatic to do as yet, so we want to watch the closing prices. The 2150 in the S&P is a very key price, as is 4,900 in the NASDAQ. That's another one that we're looking at. Of course, 18,350 in the Dow Jones. One of the things that I heard on John Logan's show is what Joey John said is what would make this market go higher. Hey, folks, it doesn't need any reasons. It's been going higher for 8 years. Whether it's due to quantitative easing or not, who knows? It's going to have a correction one of these days, but might not necessarily mean now. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.